We are now live. Let me get my paperwork on. Right, so thanks for attending the Governance and Audit Committee. Have to bear with me a sec. I'm trying to go from one. I've got everything on one screen, so if I'm pausing, it's because I'm trying to go from one page to the other. So if I just look at the agenda, then the first item is apology for absence. Have you got apologies, Pamela?
Yeah, I've got Councillor Mugford and Councillor Whitcott who sent apologies.
Okay, thanks. Next item then is declarations of interest. Are there any declarations? No, I can't see anyone. I think everyone's turned their cameras off, so I assume therefore there's no response. Okay, so there's no declarations. On to the third item, which is the minutes of the last meeting. Unfortunately, I couldn't attend. Well, I tried to attend the last meeting, but technology beat me, unfortunately. But Councillor Houlihan stepped in for me, which is great. So if we quickly go through each page, and please shout out if you have an amendment to make. So page 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12, 13, 14. Are there any amendments to be made?
No.
No, I can't hear anyone. So they can be confirmed then. Thanks for that. If we go to the next item, which is the corporate risk register. Before we get into this, if I can just remind everyone that it's not our role to query the scoring around this. This is just for us to look at the process around the risk. I know we repeat this every time, but it's always wise to remind ourselves of that. So, Reece or Paul, I don't know who's going to lead on this.
Thanks, Chair. I'll start. Paul can come in if and when required. When you ask any difficult questions, as usual, Chair. So thanks very much. We're looking back at the Q2 corporate risk register at the moment. So that takes us up until the end of September 2021. So looking back in time a little bit, so just bear that in mind when we're looking at the various risks associated with this. And as the Chair said, the role of Governance Audit Committee is to monitor the process and arrangements around the corporate risk register rather than the actual risks. The risks as they stand are within service area plans, so they are picked up then as part of the performance scrutiny committee processes for each of those specific services. So just to give a bit of an overview, looking back to July to September, obviously we were dealing with a couple of significant potential risks within the organisation at that time within the city. One of those was the post-EU transition period and Brexit and any implications associated with that, and also we were partway on that roller coaster ride with COVID-19 and Delta variant. If we remember back to that point in time, Delta variant at that stage, and obviously increasing risk associated with that because of returns to school, etc. So that's where we were at the time. We were looking within the within service plans at 46 service-specific risks, and there were some changes to those risks within that period. So we had closed risk associated with the strategic development plan, and that was closed as a result of the corporate joint committee arrangements, and that being taken in as part of the arrangements for corporate joint committees. And then a new risk associated with replacement local development plan, because we're on that cycle now of requirements to ensure we have a new LDP in place. So those were the close of new risks. And then for the actual corporate risk register, we've got 18 risks. We have some change in direction with a series of risks associated with our corporate risks. One of those was COVID, as I talked about then. As a committee, we'll note that that risk has escalated and de-escalated over the last almost 2 years now, depending on where we are with infection rates and impacts of that infection. Pressure on adult community services, very much related to the risks associated with COVID-19 and how we manage that. The escalating challenges around climate change and increased risk there, an increased risk around Brexit with the EU transition, most notably to do with a national problem around, if you remember back, HGV driver shortages, etc. at that time, which carried on into Q3, and then a reduction in safeguarding as a risk due to some all organisation self-assessment that were undertaken to ensure that we were compliant across the organisation. So that's a bit of a whistle stop of where we were with the risks. As always, Chair, more than happy to take questions or comments to feedback to Cabinet prior for this going to Cabinet in the next cycle.
I've got 2 queries, but before I come to mine, has anyone else got any queries?
If I might, Chair, I'm sorry I can't get my hand to rise.
Yes.
The risk against Brexit, okay, it's still there, but isn't this rather a blunt tool to define where the risks actually are? Because obviously I know we've got a great deal of problems with recruiting to care homes, etc., etc. And I noticed, and I appreciate that you've gone out to the community to actually have recruitment fairs, and Bettis was the one I actually noticed. But don't you think those need refining down to say, well, okay, we're fining property service. Sorry, we don't do property service anymore. We're fining highways, we're fining corporate services, but we've still got a problem in social services. You get my drift, I think.
Yeah, thanks, Councillor. So within, I suppose there's a couple of linked pieces there. So it was outside of this period, but I will talk about it. So, recently because of challenges with social care, because of, the Omicron variant and the amount of community transmission we have had and continue to have with that, and pressures on social care, we've gone across the region, so across Gwent, a range of interventions to ensure that we can manage that ongoing risk more appropriately. So that's been happening more recently. That's not necessarily to do with Brexit. That's to do primarily with dealing with COVID-19. Within each service plan, so I'm going to dig down into this a little bit now. So within each service plan, there are obviously a series of risks that each of those services, so social care will have risks within their service plan that they're dealing with, but they've also got workforce planning within it. And I think, Councillor, that's where both of those things come together. So, there's been a significant piece of work being done across the organisation over the last 18 months around workforce planning, look at our current workforce, our future workforce, training and development, recruitment and retention activities. So within each service plan, so without delving into that because it isn't part of this report, but within each service plan there is a section in there which talks about how they are tackling those specific problems. So absolutely, as far as the corporate risk register is concerned, the escalation is quite blunt, because this is right at the, I'm going to mix my metaphors now. It is quite blunt, but it's also the top of the pyramid of other activities which show you the totality of that risk and the activity going on to support it.
Yeah, thank you, Chair. Thank you, Rhys. I think that answers my query. And when it's close to refine, I'm sure we'll see that coming onto the risk register. Thank you.
Okay. Councillor Giles, I think he's got a hand raised.
Yes, thanks. Hi, Rhys. Nice to see you again.
Hello, Councillor Giles.
Yeah, I picked up on the education, as you can imagine. I'm particularly interested in. And I noticed, of course, ALN and SEN issues ongoing, and the school budgets. I mean, if I read it correctly, it seemed that the school budgets were perhaps not looking as serious as we thought some time ago. I'm out of date with it all now, of course. But if that's the case, it's very impressive, that they're being managed. I think it was just a couple of schools mentioned in there, and work by all of you. I mean, everyone within the authority has been a massive amount of work, Sarah, all the team, but also the schools, of course. It's been a major problem and such a priority. So I wouldn't mind a little update on that, if that's okay, a little bit more. And the ALN and SEN. Obviously there are ongoing problems, and I understand entirely why that is, and what the post-COVID picture is going to look like. I know you can't see into the future, but I think some of the budgetary issues perhaps it would have caused more problems, but in some ways perhaps, I don't know if it alleviated some financial issues for the schools, not the educational issues, of course. So if you wouldn't mind just giving a bit more detail about that, I'd be very grateful.
Yeah, no problem, Councillor Giles. So I think there's a couple of different bits there. I think the schools' finance cost pressures, obviously that is an ongoing conversation as part of the budget settlements every year. There's been a huge piece of work, and I would like to say I've been involved in it. I've kind of sat in a series of meetings around this. Led by finance colleagues, by Sarah's team. We're working very closely with schools in order to come up with some plans to alleviate and manage some of those budgetary pressures. So that's been very successful on a school by school basis. So a huge effort from both officers from the council and from schools in order to do that. So that has been really, really helpful. The ALN and SEN challenges are around, obviously there's new legislation associated with that, new requirements for us. So again, there's some budgetary challenges and also some operational planning challenges which the teams are working through. And obviously we've got a target risk score associated with that, which has been set by education, and there's work planned, in order to try and bring that back down to that position. But that is going to be very challenging because obviously we've got new legislation, we haven't got a finite budget, we haven't got finite resources from staff either, and there are new requirements for us to meet. So there are challenges there. I think the overall budget position for schools is quite interesting as far as COVID's concerned. Obviously they've had significantly increased pressures in schools, so they have had costs associated with doing that, but obviously Welsh Government have had a hardship fund in place in order to support that. So I suspect overall that's probably balanced itself out over that period of time. I think the biggest impact has been that really concerted effort between local authority officers and school officers around actually managing that appropriately.
Thanks. I mean, and that has always been the case. It's been fantastic work over the last 10, 12 years, particularly keeping a grip of those costs, which has been a tremendous effort. So thank you for that. Just briefly, when I say post-COVID, we know it's not going COVID, but things will go back to some sort of normality, I'm assuming. Like I said, I haven't sort of been in the loop with those discussions. So I know you don't have a crystal ball exactly, but are there concerns in regard to when those changes take place now and that financial support from Welsh Government, etc., that additional payment, that goes and back into a new ball game then?
Myron's, as if by magic, appeared on the screen, Councillor Giles.
Hi, Myron. Nice to see you.
Respond to that question.
I think the ending of the hardship fund at the 31st of March, which has been confirmed, is a concern. Now that's obviously mitigated slightly by the fact that the settlements have been very good for local government, and Welsh governments have been pretty, pretty quick to say you will need to deal with, any residual impacts from the 1st of April onwards. So there's been, prior warning and funding. So we are working currently with the leader and cabinet to put together, as part of their final budget deliberations, a risk mitigation plan to manage the, I guess, inevitable cost that will still be in the system, both cost and also loss of income, because normality will not return on the 1st of April compared to the 31st of March. So therefore, we are still expecting to see some financial issues. We will, obviously, that is a developing piece of work, so I can't go into much detail on that here, but clearly we are working on a risk mitigation plan as part of exactly what you say there. It will need to be sufficient and robust. In due course, maybe this time next year, we'll have 12 months under our belt, and there may be some permanent changes to our budget that we will need to consider and make. Today, it's too early to sort of say what those are going to be, but with 12 months experience under our belts, we will be considering that position then. But at the moment, it's mitigating the more immediate impact that we are focused on.
Thank you. I won't add any more other than to say, Myrian and everyone, thank you so much for all the work you've done with school budgets. I know it's been tremendous. So it's, it's good. I've got every confidence as it goes forward. Thank you.
Thank you very, very much for that.
Okay. Are there any other questions? I've got two very quick ones, if I may. The first one is on page 32 of the pack. So Ash dieback is showing 20 as an inherent score. So I'm not going to query the score, but clearly with so many trees being cut down, I would have thought that by now there would be a direction of travel with that coming down. Is it just a timing difference? Because obviously this is a Q2. I don't know if there's, well, I guess what I'm looking for is, obviously we want the risks to be considered on a live basis. So I just want to make sure that somebody's reviewing that regularly, really.
Yeah, I agree, Chair. I believe that it probably will be coming down over the next couple of quarters as the team are progressing the ash dieback work. So yeah, we'll be keeping a monitoring of that particular one as they go through their work program. So yeah.
Okay, great. And the only other query then is on page 42. I just want to make sure I'm reading the page right. So we've got an inherent risk score on COVID of 25. If you look at the matrix, the dot is showing a score of 20. So is the dot in the right place, or is the score now? Oh, sorry, the score is 20. So
yeah,
25 is the starting score then, is that right?
Yes, that's correct. Yeah.
Right, okay, so there's a direction of travel coming down. Yeah.
Yeah.
That's great. So that was the only queries for me. I just wanted to understand that. Is there anything else for anyone else? No. So I think that that means the paper is duly noted, and thanks for all your answers and presentations today. Thanks both. Right, so if you go on to item 5, which is capital and treasury management. Robert, do you want to present this?
Yeah, I don't. Myron, you didn't want to say anything first. No, that's fine. Okay, nope. So obviously it's a long report. A couple of long appendices within the report as well. So what you've got the cover report as well. What I'll do is give a quick, I say quick, hopefully quite quick, run through of the contents of the cover report in particular, and then obviously we can cover off any questions about the specifics at the end, if that's okay, Chair.
Yeah, that's fine. Yeah.
Okay, so I guess the main thing to say in terms of this version of the capital strategy and the treasury strategy is This is us now entering the last year of our existing capital programme. So the strategies themselves are largely sort of evolutions of what's gone before. And there'll be probably a more fundamental review next year as we develop the new, or as we will have developed a new programme by then. So there will be quite a different look to that and a different programme within it. So as I said, we're entering the last year of our programme. There are 2 additional years that have been added to it, but that's just to cover schemes that extend beyond 22-23. So for example, the 21st Century Schools Band B programme is a multi-year programme, extends beyond the next financial year. As you're aware, the report's brought to Governance and Audit Committee for consideration and comment, and then it will go to Cabinet and it will go to full council for sign-off. So that's the process that we follow in terms of the capital strategy. Probably goes without saying it's captured in the report, but this is very much a long-term looking document covering at least a 10-year period, but beyond in some cases. And we're required to sort of underpin all considerations with those 3 main objectives of affordability, prudence and sustainability, and they're critical within the decisions that are taken in conjunction with this report. You'll note that within the head of finance comments, one of our main aims is to limit the growth in debt funded capital expenditure, i.e. expenditure that's funded by borrowing in lieu of MRP. And so, and the growth in the capital financing requirement. So that's in recognition of the fact that our internal borrowing capacity will reduce over time, and also the way that our MRP policy works is that the charges increase over time. So we're looking to limit that growth in order to keep it stable overall, because actually capital financing charges will continue to increase in the interim. Within the report on page 3, if it's helpful, there are two sections that just give an overview of the 2 strategies, what their main purposes are, and they're broadly set out within the Prudential Code, which we're required to follow in developing those 2 strategies. In terms of the specifics within the report and sort of the main highlights, so you've got the details of the capital programme there, including those additional 2 years. So the 7 years in total is 288 million. That includes 2.4 million of currently uncommitted borrowing headroom. And I suppose just something to focus on there is the fact that in 22-23 at this stage already we're looking at a spend in excess of 100 million. Clearly that will be a significant challenge for the council to deliver and achieve, especially when you contrast that with the levels of spend achieved and incurred in previous years. That's a considerable amount, so there's an obvious risk of slippage there, and that's captured within the report. Of that total programme, 77.5 million is anticipated to be funded through borrowing, and of that 43.1 million is still to be incurred over the remainder of the programme. You've got within the report the Prudential Indicators, the 2 critical ones, the external borrowing limits, the authorised limit and the operational boundary. They are derived from the capital programme and are 271 and 192 million pounds respectively. That's when you exclude figures in relation to PFIs and leases. And that reflects an increase on the limits that are currently in place in this financial year, and that just underlies our position as a net borrower going forward. Within there, you've also got table 3, that's capital, shows the capital financing costs that we have budgeted for within the council's revenue budget. You can see that they're still relatively high, albeit they are a reducing proportion of the council's overall revenue budget going forward. That's mainly due to the positive settlement that's been received this year and the indicative settlements that we've had for the next 2 years. But what it ultimately shows is that ultimate impact that capital expenditure or debt funded capital expenditure has on an authority's finances. There's then a section looking at the longer term, references the factors I've already said about the council needing to develop a new capital programme and trying to ensure that the CFR does not grow overall. We've modelled 2 scenarios as part of that work, one with annual debt funded expenditure of 5.5 million a year and one scenario of 7.5 million pounds a year. And what they both show, and you can see that within the liability benchmark graphs that are included within the document, is that they either stabilise or reduce the CFR, so achieving that aim, that broad aim that we're setting out there. But as I've already said, there's a chart within there. The capital financing costs, even with those 2 scenarios as they are, would continue to rise. because of the reasons I've already given, and so that will place further pressure on the MTFP. As part of developing the new programme, we'll be reviewing the governance structure around how schemes in effect get added to the programme, with the main aim of trying to make it a more robust process and limit the amount of slippage that we report, because we're still reporting considerable slippage year on year. So we need to try and strengthen our processes to minimise that impact. And I guess the other main thing, when just thinking about the capital strategy, there's been recent consultations on changes to the Prudential Code and the Treasury Management Code, both of which are sort of being finalised and published at the moment. So there'll be a soft launch in relation to those, but there is one specific requirement in relation to the Prudential Code, which is that local authorities will now be precluded from undertaking borrowing where the sole aim of that borrowing and that investment is to yield from that. So that follows the lead that the PWLB took in not allowing borrowing for that purpose. So councils are that's now been backed up within the code. There's no real impact on Newport. There are no plans of that nature at the moment, but what it does mean is if there were any plans, and there were plans like that documented in the commercial strategy a few years ago, they would not be able to be taken forward now. But as I said, there are no plans of that nature. And just to conclude, there's sections in there on both the borrowing strategy and the investment strategy. So as I've said, net borrowing requirement over the medium term. Our preferred strategy is still to maximise internal borrowing, so deferring the need to undertake actual borrowing for as long as possible. But where relevant, we would consider borrowing in advance of need, with the aim of securing low interest rates. But obviously we need to balance that against the risk of borrowing too early and incurring unnecessary interest costs. But also we need to consider the current interest rates on short-term borrowing, which are low at the moment. So we need to ensure a balanced portfolio and not over-committing ourselves in terms of interest. And then in terms of investments, just to finish off, we need to maintain an investment balance of 10 million. That's to retain our professional client status as part of the MiFID II requirements. But our overall aim is to strike a balance between risk and reward, which we've said before. And as part of that, we would and are giving consideration to a diversification of investments just to try and ensure that balance is achieved. So that's it. That's a quick run through of the report itself.
Chair, if I could just mention a couple of things, well, as well as the potential indicators on borrowing, which Rob has mentioned, we are also next year introducing a kind of local indicator, which is essentially debt funded new capital expenditure, which has been set at 2.4 million, which ties in with the current sort of headroom that we've got on capital to take us to the end of this capital programme period. So that is a definite limit next year on new borrowing commitments. And then for the new programme, we haven't set any commitments for those yet, but the intention is to sort of do that next year. But as Rob has also indicated, we have modelled two levels of 5.5 and 7.5 million. And whilst that does stabilise our borrowing commitments, it doesn't stabilise the revenue costs, which will continue to increase for the reasons that Rob has kind of outlined. But we will be setting those limits as well with the intention of stabilising the capital, the CFR, the capital finance requirements, the need to borrow. So we're very mindful of the need to be able to set those limits. So we have one next year, and we've modelled two here again at 5.5 and 7.5, and it is my intention to recommend that we set a limit for the programme period somewhere in that area this time next year as well. Thanks, Chair.
Okay, I got a couple of queries, but is any are there any questions from committee? I can't see any hands being raised. Councillor Hooder, yeah.
Yeah, just so as I understand it, Chair, the extension of 2 years on the capital expenditure programme, has that been brought about because it was planned due to the expenditure programmes in question, or is it just something that's happened and it has to be done because there's been underperformance within the council of these programmes?
The 21st century schools programme does run to a slightly different period than the council's own capital programme, but there has been slippage as well.
Yeah, we discussed this in previous years, and I think we looked at the 25% underspend at one point. So this is just something that needs to be addressed by better, tighter programme management. Yeah. Okay. Thank you.
Wouldn't disagree with you. Yeah.
Can I just add to that then that Robert, you mentioned that we had the budgeted spend of 100 million, and you implied, well, said actually a bit of a risk that we might not spend that. And typically speaking, over the last 5 to 7 years, we've always underspent our capital programme by around about 20 to 30% every year. So following on from the last statement, if we are struggling to hit our expected spend again this year, what is happening with programme management around capital costs? Because this is a continuous problem, and it's affecting what the strategy would be for this document, which I'll come back to later. I'm just wondering very, very quickly, don't spend too long on this, but what is the council doing to get better project management in this area?
So it's largely relevant for the development of the new programme, as I mentioned. So as I said, we will be looking at the sort of governance arrangements that we have in place. I think there's a recognition that they need strengthening, but there is also a recognition that in some cases there are capacity challenges in terms of capacity, the staff that would be either overseeing or delivering these schemes, project managing them. So that is also a sort of challenge that's been acknowledged and is something that is being given consideration as part of the budget process. But obviously that's a competing priority against all other priorities. But it is something that's been discussed quite a lot quite recently in various forums in order to kind of give a profile to that risk and a recognition that exists. And I think there is that recognition now. So as I said, with the restructure that's the senior management restructure that's being undertaken, with the executive board now being in place, I think there are now sort of stronger sort of structures around what will be the management and the oversight of the capital programme. So we would anticipate that risk will be reduced going forward. So for example, as we develop that new programme, the schemes are brought forward to be added to that. We will have a more robust process in place, and we'll try and avoid any sort of kind of placeholder approach to putting schemes into the programme. So we would want to see that those schemes are ready, that they're deliverable, and that the profile, particularly that they're being added into the programme, is accurate and realistic.
Okay.
So Chair, I would add to that and Reece is obviously on the call. We are reviewing governance arrangements across the whole piece across the authority now, as those management teams and structures are being filled, and the capital programme, both planning and the delivery, will be part of that overall review and will need to be strengthened for sure, as Rob has indicated.
So what I would suggest, if we're going into the year-end accounts process, is that if there is slippage, you may want to refer to the capacity issue in the accounts at that stage, because otherwise you have this slippage being recorded again, and we never seem to say why there's a slippage. I think from a reader's point of view, it just gives a bit more context. But I do, I am glad to see there's been it's taken forward as part of the budgeting process as well. I've got 2 more questions then before I pass over to Councillor Giles. But The first is really more of a comment rather than a question. Yeah, you've asked for comments on the paper. I still think that this paper is a reactive rather than a proactive document. So it's, to me, it's not a strategy, it's a method of funding the capital programme. And I think going forward, I know I've said this every year, but personally, I think a strategy should be something along the lines of, well, how much debt do we want to carry? So, for example, you mentioned in one of the tables, our authorised limit is around about the 300 million mark, it might be 320, something of that ilk. That's our maximum borrowing. The operational boundary is, broadly speaking, about 220 million. We seem to imply, therefore, that we want to be below the 220, which is great. But on the other hand, our capital programme is, what, roughly 100 million. So really, the strategy should be saying, yes, we could go up to 220 million, but as a council, we don't want to exceed, I don't know, 120 million or 80 million or whatever the appropriate level is. So we should be driving, if you like, what the capital plan should be set at, not the other way around. If you're looking for a strategy. Bit like if you had a house, if you had a mortgage on your house, a bank would typically say you can't have a mortgage more than, I don't know, 4 times the salary. Why can't we do something similar there for a council? I'm not saying that particular percentage, but you get a sense of what I'm trying to drive at. Okay. In terms of the actual paper itself, I do have a query on one of the paragraphs because I just don't understand the point as it's written. So if we go to page 73, paragraph 12, so it's down the bottom. I don't know if there's a grammatical or spelling problem with this paragraph, but I just don't understand what the paragraph is trying to say. So if in the first sentence it says, it should be noted that the 2 limits described above, as the authorised and operational boundaries, only place a theoretical limit on borrowing that could be undertaken to fund new capital expenditure, comma, if there's evidence of slippage occurring across the programme. What does that mean?
Yeah, I appreciate what you're saying about the way it's written. I think when it was written, I knew what I was trying to say. I think what I'm trying to say there is the way that we currently calculate both the authorised limit and the operational boundary is based on the capital programme that we're looking to deliver. But as we mentioned, obviously slippage is a common occurrence and it can be significant at times. So what we're saying is, whilst those are the borrowing limits as set out, because of slippage, we'll never really get potentially anywhere near them, or we may not achieve them. Achieve's the wrong word. We don't want to necessarily achieve the authorised limit. You know what I'm saying. So what we're saying is we feel that can still leave quite a lot of latitude for additional borrowing that would exceed the programme. So what we're saying is, and this is why this new indicator has been brought in, we feel like we need another measure of control in terms of borrowing. So that is why we're suggesting that actually the borrowing headroom that we include within the programme should also itself be an indicator, so that if we want to increase the level of debt funded expenditure and actually take it just above what's in the programme already, that in itself will need to be approved, and we won't just rely on the authorised limit or the operational boundary. So that's what that paragraph is trying to say.
Can I suggest,
appreciate it perhaps needs rewording.
Yeah, if you could, just to tweak it a bit, that'd be great. That's me done. Councillor Childs, you had your hand up.
Okay, yes, thank you. I mean, I think it's been an interesting discussion on this, and I agree with the points that have been made. And you know, the reviews should take place all the time, shouldn't they? There's always room for improvement, as someone we know used to say all the time. It's the biggest room there is. So yeah, it's been very interesting. So I just wanted to make a small point, really, in a way, was you know, my experience with the Plan B capital expenditure is. Of course, that's match funded, So that causes great difficulties because, you know, it's funded to what we can afford, and we could afford a fraction of what we needed for all the schools. So we were quite sort of limited with that. I dare say that's the case now. And then I think, Robert, you were just talking about, I've sort of written down wriggle room, really, because, you know, you've got developers who suddenly put a huge big chunk onto the costs of everything, expected and unexpectedly. And there's costs that come in left, right and centre, really, that are not, and in some ways can't be planned for. There is that wriggle room that's put into it. So and of course the revenue that's tied in with that. So really it was just that, really, to say, you know, how complicated it is. I don't understand most of it. It was I only knew that bit, so I apologise if I'm sticking to that. But I can see how there's wriggle room, but again, you know, we do need to be as tight as possible. Of course we do, the authority in everything that's done from this point of view. But again, if I may, just taking my chance to say thank you to everyone while I can, and education as well. Thanks.
Okay, thanks. Are there any comments, any other comments before we move on? No. Okay. So paper is duly noted, and if you can make that amendment, Robert, that'd be great. Okay. Thanks for that. So next item is the lessons learned document. Myron, is this yours?
It is ours. We've got Mark Howcroft here, who has taken the lead on this work. So, Mark, if you're happy, if you can just take the council through some of the key kind of changes that we've agreed with Audit Wales in terms of getting ready for this year's end of year accounts. Thanks, Mark.
Hello, Chair. Hello, committee. So committee may recall that our statement of accounts 2021 was signed off at your November meeting as a true and fair view judgment by the auditors. I'm pleased to that it was an unqualified judgment. As always with any audit process, there are refinements, misstatements, etc., that are acknowledged and corrected through that process, and that was included in the auditor's ISA 260 document. So back in November, your discussion involved the technical explanation of some of those issues and reassurance of the changes made. So those changes have been reflected in the working papers, so they'll automatically carry through into the 21-22 process and the audit. But what we also said that we would do back in November is that we would come back to you as a committee after the exit audit had been undertaken, that we'd had a chance to have a meeting with the auditors to actually understand what worked well, what could be improved, and how collectively we could better meet the statutory audit timescales. So whilst the report does remind about some of the misstatement and correction issues and the member allowances, that's really to provide you with a context and a reminder of the background to why this report's been presented to you today. So the focus of the audit meeting, as I said, was on what worked well, what could be improved, information sharing aspects, things that had an impact upon the timetable in terms of took longer than it ought to have taken, etc. And how collectively we might adhere to ever shortening statutory timescales. We've had the, I don't know whether it's fortune or misfortune, to have certain COVID flexibilities for the last 2 years. That means the accounts have been more complicated than they would traditionally be, and Welsh Government has given certain latitude to extend the audit time frame and the production of the accounts time frame. We've taken advantage of that because the accounts have been a bit more complicated to prepare, but we recognise, Ali, your conversation earlier about COVID hardship disappearing in March, that actually there will come a time when those flexibilities will no longer exist and we'll have to revert back to more traditional timeframes. So in exploring that with auditors, it became clear fairly early on that auditors actually continued to have competing time commitments and priorities for other audits. I mean, most public sector organisations have a year end around about March there, and look to get their audit signed off as early as possible thereafter. There are some particular peculiarities to the health sector audit that means that staff that would be involved in the local authority audit in Newport are otherwise committed to the health authority audit, so that proves to be a bit more difficult. I've explained some of those issues as they've been raised to me. The audit manager has said he will be here at this meeting and is quite happy to actually talk through those in any more detail with you after the presentation, if that would be helpful. So the conclusion of that meeting was our consideration as a council is whether we similarly look to prepare the accounts to accord with that auditor availability, or whether we continue to push for those early closure timeframes. And our consideration is that, well, we ought to carry on pushing for effectively an end of May timescale, even if the auditors aren't available to us. So the report talks about the issues that affected the 2021 process and some of the refinements that we're likely to make to, or indeed have made, to make that a reality. So we talked about the delays to things like reserve approval, and again, that is potentially COVID related because we had a wealth of money coming in at the end of the financial year that had to be redirected to reserves and passports to this financial year. The COVID grant claim itself, significant amounts of money involved. I think the report described about £30 million worth of ultimate funding coming into the council that has to be receipted and allocated to particular services. And obviously part of the discussion with the auditors was around the info exchange and some of the delays and what we could do different in terms of protocols, sharing of information designed to extend the impetus of the audit and agree things in a perhaps more timely fashion than we acknowledged was the case last year. These are all building up on what I would conclude as being a good audit process, so I don't want you to think that that these are being addressed for any other reason than that. Now, it is going to be challenging to achieve that May deadline, but I think it is important for us to try to do so. The report describes some of those challenges about the pertinent issues that we already acknowledge are going to be factors to the 21-22 audit. But I think the overall perspective is that, well, it's sensible to try to work to those statutory timetables as simply pushing back the production of the accounts to a period where staff have other responsibilities to the council. We appreciate that the half-year position from a local authority perspective is quite an important one to both members and senior managers. And the technical team that do both the statement of accounts also have certain responsibilities around capital monitoring, production, etc. I mean, whilst we managed to juggle both last year, it wasn't ideal. And the point I would leave you with it, that's a very small team, and actually its resilience under those sorts of pressures is a risk that the council needs to appreciate. So hopefully that gives you an explanation of A, why the report's being presented, and B, how it's been structured as it has. And at that point, I'm happy to take any questions.
Yeah, that's that overview. Sorry, I'm getting the feedback here. Slow.
Sorry,
Yeah.
Chair, did you call me?
Yeah, you had your hand up.
Yeah, I know indeed. Mark, you talked about a small team with little resilience. What availability is there within the whole of the finance system to allocate staff wherever they're most needed? You don't operate a silo system, surely.
It's a very technical part of the work, this, Mark, isn't it?
Yeah, I mean, clearly we rely on service accountants to help us with the management accounting aspects, but when you get into the presentation of 160-page documents and following of international financial reporting standards, there's a certain expertise that goes alongside that actually we do tend to ring fence it to particular individuals. One of the things that we're trying to do differently, Councillor, is actually share around some of the closing jobs within that team, so that if anyone is off, someone else may be able to pick up someone's area of traditional fixed asset accounting, etc., because they've got an understanding of how it all works. But when you do have a team of 4, that inherent challenge and capacity is always going to be there.
Yeah.
If I could just add to that, I think just say the whole accountancy team is involved in year end. Certain parts of them are really busy in the first two or 3 weeks. Other teams become busier after that, there's a central team that brings it all together, which is made up of Mark and one capital accountant, and a business partner. Those three really are the key aspects. The work is very technical, certainly in terms of capital accounting, and that level of knowledge is not available to all people in accountancy, and it would be very difficult to sort of have that. Think about any profession, say doctoring. You've got lots of various different types of doctors. Well, it's the same in kind of accountancy. You do have specialisms, and they're quite difficult to sort of break into and know everything, but everybody is involved in the year-end process. The exception is that Mark and the capital accountant and one other person kind of is involved all the way through in kind of coordination and doing the documentation and the balance sheets parts of it. So resilience is a problem. It does concern me, but with resources as they are, that is what we have to do the best with, and that is what we do. And so far it's kind of worked out, and it's been really good.
And just to add to that, you get that problem everywhere, that it tends to be a small number of people that bring it all together. I know that from my own personal experience. And it's good that you have a learning and lessons document. There's always things that can be improved. So I'm glad you've got that. It seems quite comprehensive this year. The only point I would make is that it's absolutely right as well to keep on going to the end of May deadlines, because as you rightly say, Mark, people have got other things to do then afterwards. The fact that the auditors have problems resourcing, well, that's a different issue. But if you drag out the accounts too long, that'll give you other problems in terms of annual leave. You have to revisit the accounts, etc. So I think you're right sticking to the end of May deadlines, even though it's a bit of a pain for the team involved. It's actually less risk if you do it that way than dragging it out because people might leave or whatever it might be. Are there any other comments on the paper? No. Thanks for that whistle stop to Mark. Much appreciated, and comments from Myron as well. Okay, that's great. Thanks. Yeah, that's duly noted. If you go on to the next item, which is waiving a standard, waiving a contract standing orders. Andrew.
Thank you, Chairman. This is one of the regular reports that comes into Governance and Audit Committee. It's the quarterly report for Standing Order 24 and waiving of contract standing orders, as you mentioned. And the Standing Order 24 is to allow Cabinet members or Cabinet to make urgent decisions without going through the normal consultation process. So during the last quarter, there's one report that's come through, and that is in relation to a Standing Order 24. So there has been an urgent decision made, and it comes through to Governance and Audit Committee to demonstrate good practice in terms of governance. And the members of Governance and Audit Committee need to assure themselves that the reason for pushing it through a Standing Order 24 urgent decision was justifiable. Obviously, that will then lead to good governance. So my role is to review the decision schedule and the report, which is included within your papers this afternoon, and to identify the reason or the justification for that urgent decision. In this particular example, I've gone through the papers, and in my opinion, the justification for the urgency of the decision has not been explicit or recorded within this report, and there's no timeline of discussions around budget or options. And that's something we've discussed at committee previously, is for reports like these to have a timeline so members are clear of when decisions were made and when funding was available. So in this particular circumstance, Chairman, I'm not recommending that we call in the Cabinet member, but what I would suggest is that committee consider asking the Cabinet member to provide a written response as to why they felt it was appropriate to use Standing Order 24 on this occasion. Thank you.
Are there any comments? Because I tend to agree with that recommendation. I think this is an issue that comes up most years, you know, with the free transport in December. I don't understand why this decision is made with 2 days to go. So I do think that further information would be appreciated. Is that the committee agree with that view? Is anyone there?
Yeah, agreed.
Yeah. Okay.
Yeah.
Yeah. Okay. So Andrew, can you go back to the relevant person and get a written response for the next committee?
Yes, definitely, Chairman.
Okay, that's great. I think that's the only item in that paper that's duly noted and actioned. Item 8 is the internal audit and satisfactory audit opinions. Andrew.
Thank you, Chairman. This is another regular report that comes through to committee, and again demonstrates good governance. This is about the opinions that my team issue throughout the work that they do, following on from the audit report, and to give members of the committee an update on the progress of unfavourable audit opinions which we've issued. It does go back some years, so in terms of an overall summary, in 1819 we issued 48 audit opinions, 10 were unsatisfactory and 1 was unsound, and we'll come on to the detail of progress in due course. In 1920 we issued 32 opinions, 6 were unsatisfactory and none were unsound. In 2021, 12 audit opinions have been issued, 1 was unsatisfactory. That was a COVID related year, and in the current year 21-22, as at the end of September, we'd issued 9 audit opinions and none were unsatisfactory or unsound. So it's a promising way forward in terms of the number of unfavourables over the years is reducing. But we report into audit committee to monitor progress. So members can see that improvements have been made. We give a commitment to following up any unfavourable opinions and then report back the secondary opinion. That could be positive, it could be negative. In the past, Chairman, as I'm sure you're aware, where we've had 2 consecutive unfavourable opinions, then committee have called in the relevant head of service and challenged that individual as to why very limited action has been taken to make those improvements, and generally they've given a commitment to make those improvements moving forward. And then when we have followed those up for a 3rd time, then we can demonstrate that the improvements have been made and a more favourable opinion is given following the audit work. So in 15-16, if I can refer members to paragraph 6 of your papers, we did have 34 audit opinions which were issued, 8 of which were unfavourable, and 1 is noted in the summary box. That's because the 7 previous reports have been followed up and more favourable opinions have been issued, and they've been duly reported into audit committee. So there's no point. I didn't feel there was much point in reporting things into governance and audit committee which had previously been reported. So this is just outstanding points of follow-ups which are due. So in box 6 we have the joint venture Newport North, which was unsatisfactory some years ago. There has been some delays in getting this report up and running in terms of a follow-up, and the follow-up has started in 2021, continued into 21-22, but we weren't in a position to issue an audit opinion as at this end of September 21. But subsequently we have issued an opinion. It is more favourable, but I'll be reporting that back in next time round. So moving on to 16-17, 35 audit opinions were issued, 5 were unsatisfactory and 1 was unsound. Similarly, there's only 1 report left in the table, and that is the PCI TCSS, which is an SRS issue. And and the previous 4 unsatisfactory reports and 1 unsound have been reported into Audit Committee. They've been followed up with a more favourable opinion. The assurance I could give to members on this report is that SRS have now engaged with the SRS and the digital team within Newport have engaged with a consultant to identify a gap analysis, and that's been monitored through the Information Governance Group. And once we've got any updates on that, I'll report back into Governance and Audit Committee. So likewise, going through the table, paragraph 8, 17, 18, 40 audit opinions were issued, 6 were deemed to be unsatisfactory, 2 are still outstanding, so 4 have been reported to Governance and Audit Committee previously with more favourable opinions. Trips and visits will pick up in 18-19, and the preferred catering contractor, we're unable to follow that up because the school's yet to engage with a new contract. Moving on to 18-19, we issued 48 audit opinions, 10 were deemed to be unsatisfactory, 1 unsound, and 6 have been followed up with more favourable opinions, like I said. So these are the outstanding ones in the table. We have adoption allowances, which is being followed up in this current financial year, 21-22. We had commercial industrial property portfolio, which was originally unsatisfactory. We issued the final report in March 2021, and that was an improved opinion, reasonable. Highways, the same, an improved audit opinion of reasonable. Vehicle tracking system was previously unsatisfactory. We're yet to follow that up because the officers have actually changed the tracking system and they're in the process of implementing a new tracking system. Once that's bedded in, we will then follow that up to make sure that any issues we identified originally have been addressed with the new system. Trips and visits, we've undertaken a follow-up, and there were 2 unsatisfactory audit opinions issued, and the committee have previously called in the head of service, who gave assurances that things would improve. We're yet to follow that up mainly because of school closures as a result of COVID. Limited trips and visits have actually happened. Moving on to clear and comprehensive, which was unsatisfactory. Again, due to COVID, that audit has not been followed up as at the 30th of September. Subsequently, it has been followed up. We're in the process of putting that draft report together at the moment, and that will be reported back next time June. So moving on to 1920 opinions, we issued 32 overall. 6 were deemed to be unsatisfactory and none were unsound. 3 were followed up with more favourable opinions, and this just picks up some of the outstanding issues from that particular year. So the PTU taxi contracts are due to be followed up now this quarter 4 of 21-22. Corporate governance and moved into the follow-up of 22-23, which is the next financial year. SGO kinships, that has had 2 consecutive unsatisfactory opinions, and again, committee have called in the head of children and young people to give assurances that things would have improved. We followed it up and issued a final audit report. Opinion improved to a reasonable. Children and families impressed was originally unsatisfactory. Issued the final report in August 2021 with a more positive, reasonable opinion. Good music support, again, originally unsatisfactory. We've been in discussions with the head of service and the service manager who attended the Governance and Audit Committee previously. We haven't followed that up with an audit opinion, but we've gone in and given them some advice and issued a memo. And hopefully, when the schools get back up and running post-COVID, we will then go back in and do a follow-up audit and provide the necessary assurance back into committee. In 2021, we issued 29 audit opinions. 1 was deemed to be unsatisfactory, that was Newport City Dogs Home. So the detail of that was reported into committee previously, and we're due to follow that up in 22-23. So that'll be included in the audit plan for next year. And our current year 21-22, as mentioned, as at the end of September, there were no audit opinions which were either unsatisfactory or unsound. So that's a general run through, Chairman, in terms of where we are of unsatisfactory opinions which we've issued. The follow-ups, where there's been a positive follow-up, then that will fall off the list next time we report into committee. Managers have a commitment to make those improvements that we suggest. They agree that our weaknesses that we identified in the report, and they put their own management actions of how they're going to address those issues into the action plan, and the action plan is agreed as part of the draft reporting process before it's finalised. So there's an onus on the operational managers. There's an onus on the operational managers to move that forward. Chair, I think I'm having you still got me?
Yeah.
Hello? Yeah.
Yeah.
Just getting some IT error messages.
Right.
So that's it in terms of the report, Chairman, and I'm happy to take any questions.
Okay, thanks for that, Andrew. Are there any queries from anyone? Councillor Giles.
Yes, thank you. Just briefly, hi Andrew. Nice to see you again as well. I would say, you know, in my experience, this appears, I've got great confidence that everything's been gone into in very great detail. I know how efficient you are and you take things very seriously. I've written down dog with a bone, but that's how people describe me, so perhaps that's... But I know from experience that, you know, you are very, very efficient in this and very committed, you know, to looking into these. So it's a very general one, really, in a way. I mean, some of these are familiar, you know, the familiar ones that keep turning up, and then others are unexpected that you wouldn't expect to see there. But I see that quite a lot of them, you know, it's the COVID aspect. So I just wondered if you could sort of perhaps give some examples. I mean, I'm assuming it's staffing and that sort of thing, but if you could just give a little bit more detail for that, you know, just to explain how it's affecting services and presumably, you know, will do less so in future. Thanks.
Sure. Yeah, thank you, Councillor. Thanks very much. Yeah, the majority of unfavourables on the list, I think, relate to schools or education. So we were unable to actually go out and follow up. The schools were closed during COVID, and we were hoping to get in sooner than we thought, but obviously COVID extended longer than everybody else thought. So we will work with schools, we will work with head teachers to work that through. We do a controlled risk self-assessment, which we send out to schools, so the head teacher and the chair of governors can work their way through that. It's almost like a self-assessment to make sure that they've got adequate controls in place to address any problems. And some of the other areas, some of the other service areas, their focus was on frontline service provision. So they had to deal with emergency COVID issues rather than deal with audits. So we acknowledge that. We'll build that into our plan for future years, and we'll make sure we'll give as much coverage as we possibly can across all service areas going forward.
Okay.
And pick up any pick up any stragglers during our planning process for next year.
I know you will. You go after those stragglers. Yes. Thank you.
Thank you.
Okay, Councillor Willorin.
Thank you, Chair. Andrew, thank you very much. Only one small point. In your summary sheet, the very first page, you talk about the
Sorry, I think it's very quiet there.
Sorry.
That's better.
I think Gail will tell you nobody's ever accused me of being quiet before, but there we are. In your summary sheet, you tell us about the audit opinions and what was unsatisfactory and whatever, and we've touched on this before. Could we have some sort of indication in the summaries when you're next intended to visit? You've explained to us very clearly that you're not there to manage the process, you're there to make an opinion on chief officers and head teachers, etc. So it would be very helpful if, for instance, we knew on the 2018-2019 opinions when you were going to look at them next. I know it'll be buried in the report somewhere, but it would be very helpful to say, well, 18-19, you're looking at maybe a 3-year audit period, and if we could do that, it would help us.
Okay, thanks, Councillor. I will take that comment on board. I've tried to capture that information in the tables, so we will say Q1, Q2, Q3 of a particular financial year, for example. It depends when that job comes up on our audit cycle. So we've basically got a 5-year strategic plan, but risks change all the time. Some things on that 5-year strategy might not get audited for maybe 7 or 8 years because other risks come on board which take priority. But where we've got an unfavourable audit opinion, my commitment to the committee is that we will follow that up within 12 months of issuing the final report. That's what we endeavour to do. Sometimes that's impossible for a number of reasons, but I take on board your point, and I'll make sure we try and include that information in the future reports.
Thank you. We're not expecting you to work miracles. We do appreciate that you may be asked to look at something because it's become an imperative, but if we could have some sort of indication, please.
Okay, I'll look into that. Thank you, Councillor.
Okay, thanks for that, Andrew. Very thorough as usual. Are there any other comments or queries from anyone? No. Okay, that's duly noted then. You can make that small amendment, or for the next meeting. That'd be great.
Sure. Thanks.
Thanks for that. And then finally, the work programme. I don't know who's leading on this. Is it you, Andrew, or is it Pamela?
I think it is Pamela, but I have got a comment to make if I could, Chair.
Okay. Yes. In
terms of March's work programme, if I could add in an update of the internal audit charter, I'd be very grateful.
Yeah.
Thank you.
Okay. Are there any other comments on the programme?
Chair, if I could comment. For the March audit committee, I think we would look to bring our annual audit plan. So if we could add that to the March committee.
I beg your pardon, sorry, you're breaking up a little bit there.
Sorry, I was going to say, can you hear me better now?
Yeah, that's better, yeah.
So for the 31st March committee, we would look to bring our annual audit plan.
All right, okay.
So we could add that. And the other thing just to note is at the moment on the 31st of March and the next committee in 26th of May, it's got the annual report and grants for both sessions. So we're still undertaking our housing benefits work. So if we do finalise, we'll try to bring it to the March one. If not, it'll be the May committee.
Okay, that's fine. So can you, depending on when you finish your work, can you liaise directly with Pamela on that side of the committee, make sure that the programme is amended accordingly? Is that okay? That's great, thanks. Did you have a comment, Councillor Thomas?
Oh, no, not this moment. Well, it's all, sorry, not this.
Okay, that's great. If there's no other comments, then that's great. We'll duly note that report, and Pamela, if you can make those amendments, that'd be great. And I think the only other thing then for me to say is thanks for your attendance tonight, and the next meeting is on the 31st of March. So thanks for your time tonight.
Thank you very much.
Thank you very much. Good night all.
Thank you.